A very warm welcome and good morning to you from the offices of the Development Bank of Jamaica in Kingston. I'm Audrey Richards, and I'm the project coordinator of the Jamaica Venture Capital Program. It's certainly my pleasure to be here this morning to greet you, our online audiences through various social media platforms, as well as our esteemed panelists, industry experts who are here with us this morning. This webinar today is a third in a 7-webinar series, and it's been brought to you by the Development Bank in association with the Caribbean Alternative Investment Association. Now, we recognize that the COVID pandemic has had an unprecedented impact on our lives and our livelihoods. And as we seek to undertake the recovery and the growth from this COVID pandemic, we recognize that it's going to be business unusual for many of our businesses here in Jamaica and indeed across the Caribbean. So this series of webinars is being brought to you looking at alternative investments and the role that they can play in the recovery from COVID. So again, it's certainly my pleasure to be welcoming our panelists here, and I'll pass on over to our moderator this morning, who is Mr. Steven Whittingham, who is the Chief Operating Officer of the Grace Kennedy Financial Group. Over to you, Stephen.
Good morning or good afternoon, wherever in the world you are. Welcome to the offices of the DBJ for this DBJ JV Capital Korea webinar. It's a pleasure to be here. I'm Steven Whittingham, and I'll be the moderator for your session today. And we have some great panelists with us in studio and then also in the cyber world. So I'll just start by introducing very briefly our panelists. Their bios are on our website, so you can get more information about them, and you'll also be able to hear from them during the course of our session today. But in the room with us, we have Denise Arana, who is the General Manager of Public-Private Partnerships and Privatizations for the DBJ. It's a real tongue twister. I just called her Jamaica's Chief PPPPP Officer.
P4, Stephen.
P4, okay. I think that describes her role adequately. We have Herbert Hall from NCB Capital Markets. Herbie is the Vice President of Investment Banking. We have Brian Frazer from Scotia Investments. Brian is the Vice President of Asset Management. And we have David Delaire, who's in Germany, who is the Managing Director of MPC Renewable Energies. And this panel today was specially designed to give our audience different perspectives on our topic, which is private equity and its role as a funding tool for infrastructure. And everyone will get their chance to share their views, but just at a very high level, Denise will be talking about or providing some context on the public sector or the PPP perspective. David will be providing some context on the perspective of a fund manager. Herbie will be providing some perspective on the arranger perspective, and Brian will be providing some context on the investor perspective. So we'll start with ladies first, as we should always. And I would ask Denise, Denise, just to kick us off, why don't you just share some context about what is infrastructure projects, what are infrastructure projects, give some examples, and why are they important to an economy?
So thank you so much for that, Stephen, and thank you for this very important discussion on infrastructure. I think that a lot of people see infrastructure as something separate and apart from their daily lives, and they don't really know how it impacts their lives. So I think if we are going to define infrastructure, I think we have to use some critical examples and the importance that infrastructure, the important role that it plays in economic growth and development. And if one can imagine, and I'm not even going to talk about a large company, an SME surviving without infrastructure, absolutely no way. I think for a small company, picture that company surviving without a road, to transport goods and services without power, electricity, and more importantly now, ICT infrastructure, communications infrastructure, and that has been highlighted post-COVID. So I look on that as economic infrastructure, the infrastructure that's required to facilitate economic activity. But again, there is another side of infrastructure that sometimes we tend to overlook, and it really means a lot to me, particularly working in government. But there's social infrastructure as well. And social infrastructure really is about promoting, you know, the well-being of Jamaicans and improving their quality of life and, you know, social equity. And by that, I'm talking about schools. I'm talking about health facilities, which again has come to the fore, you know, the adequacy of health facilities in Jamaica, you know, since COVID. And we're talking about like, you know, housing stock. So if you look on social and economic infrastructure and you look at them together, because one can't exist without the other or should not, then we have what I would like to term inclusive growth, right? Which is very important to the government at this point in time. So it's very important for the government to ensure that our infrastructure stock is, you know, adequate, world class, and achieving the objectives, you know, that it's supposed to support. Unfortunately, there's another sad truth about infrastructure, which as government, I mean, we can admit, it's a problem that exists not only in Jamaica, and it's not a Jamaican thing, it's not a Caribbean thing, it's a global phenomenon where consistently governments underinvest in infrastructure. So, you know, inherently, there's a bias towards, you know, recurrent expenditures because they're so real and evident and urgent. And there's always the kind of tendency to defer spending on infrastructure. So you're left with an infrastructure deficit. And that infrastructure deficit has got to be filled if you want economic growth and development. So the Jamaican government is very, very clued in to the need to have that gap filled. And again, unfortunately, because of, you know, the fiscal situation and obviously post-COVID, the strings are even pulled tighter for the government. So we have to look to private partnerships. And when I talk about private, you know, partnerships, it used to be just talking about probably a group of companies that come together to run hardcore, really complex infrastructure. But I'm proud to say with the advent of our transactions on the stock exchange that I'm talking to the average Jamaican when I'm talking about partnering with the government to fund infrastructure. So it's important to the government. We see private finance, we see private capital as very important in implementing the infrastructure needs of the country. And one of the things I'd like to point out to people, so I mean, apart from understanding that infrastructure relates to you as a Jamaican, right? The government uses several mechanisms to facilitate private capital in the infrastructure space. So I think everyone would know about PPPs, public-private partnerships, where the government enters into these long-term arrangements for complex infrastructure assets. You know, we enter into those arrangements with the private sector, private parties. And the good thing about those types of arrangements is that the private parties take a lot of risk, right? And so they assume the investment risk, construction risks, and they operate and maintain that asset over a period of time. And the government allows them to recover their investment, make a reasonable return on that operation. And at the end of that, the asset reverts. The operations of the asset reverts to the government. I think I need to point out very clearly, and this is a myth that I really want to use this forum to really deal with, that under those arrangements, those assets remain owned by the people of Jamaica. So that's very important. There are two other mechanisms that the government can use to introduce private capital. One is obviously, as I said before, via the stock exchange, and the government has had some very successful stories, Trans-Jamaica Highway, Herbie, Wigton Wind Farm, and that puts infrastructure investment squarely in the hands of every Jamaican. The third methodology would be for the government to actually sell assets or lease assets to private parties so that they can assume and implement their own privately funded infrastructure projects. And I'm thinking now, for instance, the Bernard Lodge development, where the government will be selling assets, land assets, and private parties will be able to develop commercial space, housing stock, etc. So there are many ways that the government can partner with the private sector. I just think that has to be clearly understood. And it's not something that's left for large corporates, but the average Jamaican can participate as well. So I think that's it for me, Stephen.
I think Denise has given a great example of our audience, a great understanding of the PPP sector and how that relates to infrastructure. You've brought up some very interesting topics like the role of private investors in infrastructure project financing. So we can talk about that a little bit more. I think that will be a very interesting discussion. Mm-hmm. But I think also you made a point about GDP and growth and contribution for infrastructure to the GDP and growth of an economy. And I would say to you that if you just take a look at the countries that have the highest percentage of their GDP allocated to infrastructure investing, they are also the countries that are growing the fastest. So there is a very
direct correlation
between these two things. So with that said, thank you for kicking us off today. David Delaire is in Germany. He's the managing director of NPC Renewable Energies, and David has been a very active investor in PPP projects all over the world, and most recently in Jamaica. I'd love to ask David a few questions, so hopefully we'll be able to see him soon. But David, really, we want to get an understanding from you. It took us about 7 minutes into this session to mention the word COVID. So, can you just tell us from the fund manager's perspective, what kind of assets have you been looking for in the past, and how has COVID changed this situation for you or your investment outlook?
Thanks for introducing me. So today we're focusing on renewable energies as a company, and also real estate and shipping. But our more dynamic activities have been second, real estate, and that's specifically in the German market. And firstly, renewable energies, which is what we have done in Jamaica. So we partnered on the largest solar project in Jamaica, the one with the cheapest power in Jamaica, so to speak. And we're very proud to be associated and to be owners of that project. In a situation like that, I'm just going to speak about energy, because this is our focus and this is our primary interest in Jamaica itself. So we say energy, we're talking about renewable energies, which is wind and solar. And today, if you look at the COVID situation and how it's impact us as investors, well, it's a blessing and a curse for us, because what we see is now there are more deals available than there is capital, which is always the case. However, the developers and the project owners are more aggressive in terms of approaching investors like myself with their project. Due to the fact, of course, because travel is limited, you get more emails, you have more conference call, more web-based interaction. And in a situation like that, it makes it even more challenging to sift through the better projects, because you have to look at them, and some of them you might have to do a deep dive because they're not so transparent in terms of what they're bringing to the table. Whereas prior to COVID, you could go, you could look, you could kick the tires, if you will, and you could sniff out the good projects by having a site visit or meeting with the owner or project developer before you decide whether you want to proceed and acquire that asset. So this is one thing that COVID has done for us. Now, in terms of policies that's associated with these assets, I'm speaking more on insurance and reinsurance policies. You find that they're getting a bit higher, and that everyone is looking into their policies more. I was in a webinar the other day where my colleagues in the space were speaking about the discussions they're having with their investment brokers. That's one point. The other point is the service agreements that are tied to these assets, whether they're in construction and whether they're in operation. Now, more people are going deeper into the review of these agreements, and some to the extent where they're calling on the service provider to renegotiate them. Service provider, on the other hand, is more open to discuss renegotiating these contracts. The alternative is, if the contract is for 10 years and the investor wanted to do it for an additional 10 or 15 years, and the service provider is not willing to renegotiate for not just the additional 10 years, but the remaining years that's on the contract, then an investor like myself who understands the space would say, okay, fine. I will, one, either let your contract run out and find another service provider, or two, I will terminate your contract with you and pay you the termination fees. So now, as an asset owner, a fund manager, there's more leverage in terms of negotiating with service providers.
David, thank you very much. You're raising some interesting points about the high cost and execution risk associated with these projects. And as Denise said, these are complex projects. What is also complex is video conferencing, and we are having some technical difficulties. We are not actually seeing you. So if there is an opportunity for you to make some modifications on your end, maybe we would be able to address that. And I'll give you a chance to do that, and then I will continue to our discussions on this side. Oh, we are seeing you now. Great. So going forward, we'll be fine. So Herbert Hall, I mentioned, is the vice president of investment banking at NCB Capital Markets, and Herbert and his team have been some of the leaders in the structuring of some of Jamaica's largest infrastructure projects. They've been very successful, and I think he and his team have received the type of recognition that they deserve for executing those projects so well. So congratulations to your team. Today I wanted to just talk to you a little bit about the sources of capital for funding these infrastructure projects. These projects are complex, they're large in size. They oftentimes have long tenures. Right? So, you have to put together some really interesting structures to be able to attract a wide base of investors. And just wanted to hear from you about how you guys view that and what kind of successes you've had and what areas you've been focusing on in terms of raising capital.
Right. Thank you much. So as Denise would have mentioned, capital stock, not only in Jamaica, but across the world, has a significant deficit. I think some of the numbers that I've seen speaks to trillions. 96 trillion US by 2030 is needed in infrastructure. And if you straight line that is 9.6 trillion per year. Mm-hmm. Of that, between 2.5 and 3 trillion is actually spent. So there's a massive
significant
gap, right?
Mm-hmm.
Closer to home in the LATAM area, I think the IDB did a study probably last year or so, which spoke to a deficit of 2.5% of GDP, or 150 billion US. That's the gap. So the question is, where's all that money coming from, right? Suffice it to say, it doesn't come from one source, right? And depending on the stage of life that we are in the infrastructure project, then the funding mix and funding sources could vary significantly. So if you're talking about a green field or something that is just coming to the fore, no track record or anything like that, it is more government, supranat nations or multilaterals. You have the IDB, the World Bank, that sort of thing, right? To help to de-risk. At that stage, the project is untested. There's construction risk, there's execution risk, there's supplier risk, there's offtake risk, there's a whole myriad of risks. And it takes a certain type of institution, you know, to be able to stand up to those types of risks. And so what you'd find is more often than not, government would take the lead in those by giving guarantees, etc. Now, you also have the multilaterals who are very steeped in infrastructure, understand the risk, and their objective is really to help in development and so on. And they, in terms of their risk appetite, they're risk loving, so they'll take on this sort of risk and so partner with governments, etc. Now, you also have, I mean, Denise would have mentioned PPP. So in that PPP structure, the beauty about that is you normally have contractors who are experts in those various fields, right? And so they understand the lay of the land, they understand the risks associated, and are willing to put their balance sheets behind those risks and give guarantees for performance. So that's another avenue where funding can come in via these contractors or developers. Now, the project itself is typically ring-fenced in an SPV, and that SPV can also raise debt, right? What is important in that instance is the sufficiency of revenues, the consistency of revenues, and the de-risking of those revenues, right? So it needs to be consistent, stable, and predictable. So Brian, with his billions of dollars, can invest, right? No, you find a lot of that happening, a lot of PPPs, as Denise would have alluded to. You know, that's the preferred source right now, because of the ease of divesting later. And I can talk to that. But you find that there are the different aspects. You also have the banks, right? In the early stage construction phase, the banks are better able to fund. They're better able to also manage the construction risk, you know, as they would have boots on the ground, and the disbursement of funds is controlled based on QSs, etc. So they are better able to manage. So you'd find a combination of government, the multilaterals, and the lenders. Now, when you move further, when the project has now been de-risked significantly, it is in the operational phase, this is a time where you would perhaps want to refinance existing funding, and the bond market or capital markets is a perfect place, right? The cost of capital in the initial phase of a project tend to be very, very high because of the attendant risks. Now, once you've de-risked the project, then you know you can now, you know, you have a bankable project. You can now go to the capital markets and say, hey guys, I have this type of asset, right? I need you to invest. And for us in Jamaica, we've had tremendous success in tapping the capital markets, right, for infrastructure projects. So there are a number of them. The one that readily comes to mind that everybody knows is Trans Jamaica. Little known though is NWC and their ability to garner a 40-year tenor without government guarantee or any form of guarantee by securitizing some future flows, right? So those are some of the structures that once you have de-risked your project, then you can now go to the market. I want to touch a little bit on COVID and financing, because I think while COVID would have impacted infrastructure, people like Brian still have money, right, and they need to invest, right? And so, you know, there are companies that have reliability with investments that are of long duration. long duration, you talk about infrastructure, right? Interestingly, Copenhagen, a Danish private equity firm, just closed a 1.5 billion euro private equity raise, right, in the middle of COVID. And what is interesting about that is that the managing partner indicated that COVID had very little impact on their ability to raise capital, right?
Excellent.
Another one, BlackRock, right, recently closed a 5.1 billion US raise, although it started before COVID, etc. But the message is that investments are still happening. There was life before COVID, there will be life after COVID, and the truth is that infrastructure is what I'd call COVID resistant or resilient, or it is something that is absolutely needed, and as such you can't not do without it. It's needed, right?
Okay.
So
Absolutely.
I don't know if you have any.
No man. That's a great overview. So Brian, you're in a privileged position of being the investor in all of this. You represent all types of investors across institutional as well as you also have your organization has private clients. I'd love to hear from you. Where does infrastructure investing fit in a portfolio, and what kind of returns are you and your clients expecting from these types of assets?
Well, Herbie touched on some of the benefits that we see in terms of infrastructure. We have seen where this asset class have increased over the last 10 years, and we expect infrastructure as an asset class to continue to increase, as Denise mentioned, especially after COVID, given governments thrust to find alternative means to fund their infrastructure development, as well as balancing their finances. So from an institutional perspective, and I must say, Herbie, I represent mostly pension funds.
Right.
So when you look at me, just look at the person who will retire in 30 years and want their pension benefit.
Absolutely.
So infrastructure assets, it tick a lot of boxes for institutional investors such as pension fund. The first, in principle, is diversification. Typically, infrastructural asset returns have a low correlation with the traditional assets such as bonds and stocks. And as such, typically when you add it to a portfolio of traditional assets, it actually brings down the overall volatility of the portfolio. So it provides some diversification benefit.
Okay.
Secondly, from a risk-adjusted perspective, as Herbie mentioned, we love infrastructure. Even though our market in the Caribbean is just growing, when you look at the research from the more developed market, what you would have seen, the research would have shown that infrastructure asset actually earn probably just right below equity returns. However, when you look at the standard deviation, which measures the risk, it's probably about half in terms of the risk. So from a risk-adjusted perspective,
Infrastructure is
a good investment for long-term investors. Another one that Herbie mentioned in terms of stable cash flows, as persons who invest on behalf of pension funds, we put a lot of emphasis on being able to have stable, predictable cash flow over time. Right. So we place a lot of value on that as well. And the additional benefit which you will see from infrastructure projects and assets is that those cash flows are usually protected against inflation based on the terms of the agreement or just the structure of the cash flow to the project. So, inflation protection, a pension fund getting that will just say they don't need a manager. They'll just
Whoa.
invest in assets that bring them a real return. Because if you look at probably 99% of pension funds, their return objective is to earn a real rate of return. And the last point that I would want to touch on is that, and Herbie touched on it already, the long-lived nature of infrastructure assets provide institutional investors such as pension funds, as well as insurance companies with long structured liabilities. It provides them a tool in terms of asset management liability, in terms of them being able to match their assets with the appropriate liabilities.
Well,
so those are just some of the boxes that infrastructure assets tick from an institutional investment.
Wow.
Well, I mean, Denise is over there. She
I have to, yeah, I have to. I am so happy that I'm sitting here with an arranger and a financier who is just telling me to hurry up and bring all of my assets to the market now. So within the next 12 to 18 months, I expect Herbie and I do expect Brian that we'll be seeing a lot of interest in you know, the transactions that we're bringing to market, which chairman is one of the roles that government plays as originators of a lot of these infrastructure deals. So I'm really very happy sitting here, hearing all of this positive kind of news.
Run and go up to your desk and see what else you can.
Absolutely, absolutely, absolutely.
Well, so Brian, you talked about institutional investors, and Herbie, you talked about retail investors participating in infrastructure investments, and I think we need to be open and honest about our capital markets and our general financial sector in Jamaica, and we should be very proud of it because it has developed to the point where David is coming from Germany and is having there's insurance that services that can be provided to facilitate his investments. There's the banking that can be done here to do the early stages of these projects. You have a political environment which seems to be moving in the right direction and facilitating these types of things. And it comes down to now you have different kinds of investors. You have Brian, that is a institutional investor. You have David, who is a fund manager, so he's raised capital and he's deploying that capital, and you have been tapping the capital markets with retail investors. And I just wanted to get a sense from this team here, how are retail investors doing investing in infrastructure projects, and are you guys happy with what you've seen so far? David, why don't you jump in?
From our point of view, when we had our IPO, this was like the end of 2018, so beginning of 2019. We had about 240 investors total, and of that that number, I could say about 7 were entities like Brian that invested in it. The other 190 that we got from Jamaica were retail investors, small investors that invested anywhere from 20,000 or less into it. So I think we have to look at the Jamaican market as investors that are savvy. And one thing I've learned from my years of doing business in Jamaica is that they are well informed about the assets that's being placed on the market, whether it's a infrastructure or just an investment paper. They're well informed and they ask questions and they want to be informed more and more. So I respect that about the region. For our rights issuance, we had I think more than 75 new investors that came into the fund the second time, and of that, I'd say about 90% were retail investors. So I'm very pleased with the activities of the retail investors in the market, as well as on the capital side where we have the larger investors that had coming in. We had repeat investors, and we had investors that joined us like Barita and now also NCB in the rights issuance. So I think that infrastructure is very attractive from the energy point of view. As you all know, Paradise Park, it has a 20-year power purchase agreement with with JPS. So this is the type of cash flow that pension funds need in order to provide stable returns for their investors. So from my point of view, energy is a great way for Brian to invest all that money that he's sitting on right there. And
Right.
and I'll be sure to tap you in the next round once we hear about the next round of energy investments in the country.
Yes, so Herbie, why don't you?
Yeah. So what was the experience of David? I think is a general experience, right? So the last which was Jamaica, had around 33,000 applicants, right? 12,000 new applicants, which I could, as my granny said, put my head on the block. That those are retail guys.
Yes.
Right?
Yes.
So that's 12,000 new investors, retail investors, right? You may have one or two institutions, which I doubt, but what is interesting though is when you break down the figures, right? Persons less than, I think, 10,000, who got less than around 10,000 units, there were like close to 6,500 of those persons. Those are retails. If you recall, one unit was $1.41, so 10,000 units would be $14,000 if my math is correct. I'm getting old now, so right?
It doesn't matter.
When you really look again, persons who got less than 50,000 units, that number was half the 30,000, right? Persons who got less than or a million or less was 80%. Right? What that says is that retail guys are there, right? Interestingly too, women are investing more because around 55% of that, the persons who invested were women versus 45. And I think the numbers are a little bit the same for Wigton, right?
Right.
Suffice it to say that the retail investors have a greater understanding now, especially for very good projects, with some of the qualities that we have outlined before. Again, infrastructure projects are not those that will give you significant capital appreciation, right? It gives you a stable, steady cash flow. If you look at what has happened to the Jamaica Stock Exchange and the listing of Trans Jamaica, right? Between the listing and now, I think yesterday's price, it closed at like $1.30 something. Versus $1.41. That's like 2.5% decrease, right? I'm not quite sure what the decrease in the general market was. But it goes to show that even when you have 30,000 investors who are actively trading, the reduction is a paltry 2.5%. I mean, I don't use paltry in the sense, in a derogatory way, because it is,
it could have been worse.
It is less than what you had gotten in, right? But it is, if you would have held on to it, you wouldn't have gotten a loss, right? It is unrealized losses. But the point that I'm making is that in terms of the resilience of the stock price versus the other asset classes or the other equities that are listed, it is significant. It's more resilient. So investors who would have held on or who are still in there will benefit from a good dividend play, right? I can't remember just off the top of my head what the dividend ratio is, but they would get a lot of cash flow. And so, it is always important to have retail investors because they also provide liquidity. Brian loves his cash flow, so he's going to hold on to the asset. He's not going to trade, right? So you need somebody to be in and out and be trading, and that is what retail investors would provide, that liquidity. So in the case Brian wants to get out or sell down some, he can.
Okay, so we talked a lot about energy investing, and we talked a lot about highway infrastructure, and road infrastructure. Generally, when we talk about infrastructure projects, what are some of the other areas that you all as a panel view as opportunities for Jamaica going forward?
Well, I think very interestingly for us, and I just might just go back on the retail investor for the government really to take a bow that Wigton, which preceded the Trans Jamaica, was really a groundbreaking transaction that kind of paved the way for as the Prime Minister would say, the democratization of wealth, which is social, and social equity, etc. But what's interesting for us at this point and what's in our portfolio is a lot of water infrastructure projects, right? We're working with NWC on several projects that will, and it hits all the buttons that you guys have spoken about. We have a water treatment plant that's almost near finalization and just waiting on cabinet approval. There is Soapberry wastewater treatment plant, and very interestingly, there's a non-revenue water reduction performance-based contract that we are working on to take to the market in the next about, I would say, 12 months max. And so it's very heartening to know, and as I said, again, even post-COVID, the demand for water, I mean, it's always there. So we find that water is going to be one of those areas where you have some very interesting opportunities. I don't know how you guys feel about that. I would assume that you're interested. And one of the things I have to point out, you spoke about de-risking. You spoke a lot about government being at the table with guarantees, etc. And we all know the reality of the fiscal situation is that the government is not really in a position. Right. So
what you'll be coming to is more late stage.
Oh, absolutely, absolutely. But for a project to move off, there has to be an early stage, and we really require investment at all stages. One of the things, Stephen, that's very important, and that's where we're partnering also with arrangers. We have to look at structuring these transactions to make it bankable. So we understand the fiscal limitations. The infrastructure has got to happen. I mean, there's no two ways about it. So one of the things that we're doing now is working creatively, and I use creatively loosely, to ensure that we structure these transactions to kind of decrease and mitigate the impact on the government's books, because we really and truly, we do not have that fiscal space, but we are continuing to prepare these transactions. They take time and a lot of resources, and we are very confident that water is one of the areas that we're going to see real solid interest.
Yeah, so I agree with you, and I think that the government has a role to play, because we spent a lot of time talking about the financing aspect, but the government has a large role to play in these projects, in these infrastructure projects, because the financing really occurs nearly at the end,
exactly,
right? You have to talk about sourcing and the selection of the projects, which you're going back to your office, your desk right now.
Right, exactly.
To go and dig up some more.
Even.
You have to talk about feasibility assessments.
Yes.
You have to talk about all the approvals, and if there are acquisitions of land or other kinds of town type approvals that are required, the government has to play a role in that. So I think the more efficient and the more effective that the government is in dealing with those things, despite gaps in terms of offering potential guarantees and things of that nature, you will find that the investment community will be there to support.
Right, and I think I just wanted to reiterate that at the beginning of this process, when we looked at PPPs and we started to establish, the institutional framework and the policy and the processes, etc., the government has gained significant capacity to develop these projects. And we're talking about the same things that you mentioned, to project preparation, preparing all the information that Brian and, his lots of money would need to assess the project, right? So we really work very hard. And I mean, the DBJ and the P4 unit, lot of great staff there, very experienced now in executing a lot of these transactions. And you also have pockets within the government, the NROCs, the PAJs, the AAJs that are actually managing concession agreements, and they're doing very well.
Right.
So,
I would say that I'd love to ask the audience if they have any questions, because we're nearing the question and answer session. So if there are any questions, please just respond with them, and we'll be happy to take them. Your panelists will be happy to take them. I also just wanted to say that from the perspective of infrastructure investing, some of the projects are large and require large-scale participation. Some of the projects are smaller. The group that I represent, the Grace Kennedy Group, did a a power plant at the University of the West Indies. It's a 7-megawatt power plant. It is now powering the entire University of the West Indies, and it was done with private capital. I just wanted to let our audience know that there are other ways and other structures that you can use to fund smaller type projects.
Exactly.
David, I wanted you and Brian to just answer a quick question for me. So really trying to build on the concept of Herbie's point, which is that the pipeline for infrastructure projects is very large, and the funding is often, there's a gap each year, which is compounding. From your experience in the Caribbean, how do you see us bridging that financing or that funding gap for all of the infrastructure that's required for us going forward?
From my point of view, I'm also Caribbean too, so this is an interest that's close to heart. I think the three main infrastructures needs to be the focus, which is water, roads, and energy. This is my view. And I think they have to go hand in hand because they're interdependent on each other. And so the more we can try to combine those, at least two of those, I think the more attractive it would be for outside investors like myself. So if you're doing a water project, for example, and it has a component of energy for storage, for example, or solar PV, for example, that's attractive to me. So what I would do is I would partner with someone who has experience in water, and then I would bring a consortium of investors to bid for that project. This is one way of attracting outsiders into the region for infrastructure projects.
So David, when you talk to international investors who are interested in investing in infrastructure projects in the Caribbean, what are the kind of questions they ask you? What is important to them for them to make that final decision to sign that check?
The important thing is, first thing we have to overcome is some perception. Perception is like the region is more for vacation, if you will. But once you start explaining to them about the industries that are in the region that are non-vacation related, then they become more interested. For example, when you talk to them about Jamaica, they talk about Usain Bolt and Bob Marley and things like that. Then when you start telling them that Jamaica has one of the most active stock exchange a couple years ago, then they're kind of surprised to know that Jamaica is so progressive. When you tell them that you have a long-term PPA with the JPS in Jamaica, that's not 100% owned by the government. That's actually government is a minority shareholder in JPS. So when you tell them that other international investors are already there and have been there for many years now, almost decades, it starts to pique their interest. And once you explain to them that energy, renewable energy, because everyone is becoming more climate conscious, wanting to get away from fossil fueled power plants, you tell them that there are several installations in Jamaica, then it becomes a different discussion that why am I going there when all we know is nice beaches and the other famous things that Jamaica has. So once you promote the business sector and industries, then it becomes more of a business-to-business discussion rather than more of an island nation that is looking to attract investors.
Thank you, David. So, Brian, you represent institutional capital. Institutional capital is governed by various levels of regulation. Do you believe that the regime in which you operate in gives you the kind of flexibility that you need to invest in infrastructure projects to kind of fill or partially fill this gap that we see trending?
So as it is now, from an institutional investor perspective, we believe structure that the project is packaged with will determine how successful it is in raising capital locally. There are some structural issues especially on the pension fund side.
Okay.
For example, as it relates to our investment regulation, you really don't have a limit on real estate.
Okay.
So, however, for say private equity, we have a limit of 5%, not just for private equity, but also for private debt.
Okay.
And that is a small limit to work. Most pension funds would have probably maxed out on that limit using private debt from before we got that new limit last year. So if infrastructure, which is an asset class which is very similar to real estate, was even given its own limit or even a similar treatment to real estate, then you will see more pension money going into real estate. So until that is done, we're limited to participate in more or less the structures that are listed. And some of the benefits that I mentioned before in terms of infrastructural assets as a diversifier, typically once it becomes listed,
Right.
it starts behaving like a publicly listed security. So it loses its diversification and benefit. Another thing I think is as it relates to scale, infrastructural investment, you need scale. So what I've seen since I've been associated with the venture capital project and now Career is that as we create the ecosystem to have fund managers who specialize in these asset classes.
Right.
So for example, we don't have an infrastructure project fund in Jamaica. So from an institutional investor, I would invest in an infrastructure fund with a good manager with track record.
Okay.
So the more you can do to package it in such a way so you don't have retail investor actually trying to be expert in infrastructure assets.
Okay.
I think you will see a growth in the asset class and in the amount of investment flowing into it.
Well, I heard Herbie murmuring over there. It sounds like he's ready to make an announcement on
imminent.
An announcement to make, Herbie.
Announcement. COVID will be gone by tomorrow. But on a serious note, as the market matures, you'll have different structures via which pension funds, insurance companies, banks even can participate. That would have been the experience of a lot of the developed countries, right? It is fair to say that our market is maturing, right? Our capital markets is maturing. The nature of the investments which are presented to our investors have changed.
Yes.
Before now it's just government paper. Now you have REITs, you have this, you have that, right? The logical next step is infrastructure funds, because infrastructure is a real thing now. It's black swan resilient, right? It's COVID resilient, right? And so investors will find a way to package or to pool monies to de-risk themselves to participate, and they do that via infrastructure funds. I mean, who knows? Probably before the end of the year, you may see one or two or three. I don't know.
Right. We will be guided by your comments and see what happens. We do have some questions that have started to come in, so I'll just ask the questions and then we can figure out who's probably best suited to answer. Jamaica's economic growth has looked to logistics and shipping. Are local and international investors showing keen interest in this sector? So we have done some work, PPP work in the shipping and logistics sector.
Well, not Kingston Orzo, certainly Kingston Container Terminal, right? And that, I mean, there was a lot of interest in that. And I think that if you're saying COVID resilient, As far as I know, they have not been impacted, I mean, really significantly. Yes, there was a slowdown, but I mean, there continued to be traffic. And I think that there should be interest in logistics moving forward, because it really supports, again, the whole notion of economic growth and facilitating trade, etc.
Facilitates life.
And absolutely. So I do believe that there will be continued interest in that area. We don't have anything in our portfolio right now in logistics that's coming to the market very soon. We're working on the Cayman Special Economic Zone, but that will take a while. I think probably 12 to 18 months. But we certainly, based on our market read and our market sounding, there has been some interest. Again, going back to what Brian said, I said it before, the way you structure the deals.
Yes.
So there's always capital out there, Stephen. Always, always. And for us as government, the issue that we have, which can be easily resolved in structuring, etc., is how do you strike that balance between, okay, the private sector needs a certain level of return. However, there's the public interest that we have to weigh. But I certainly, from where I sit at least, I don't know, you gentlemen, from where I sit, I see that there still is a lot of interest, and it's just how do you capture that kind of interest via the structure that you bring to the market?
Well, I think you're right, and I think this question is very timely, because I do think that logistics and shipping are a huge part of the future of Jamaica, just based on where we're physically located.
Right.
And what you're seeing now, David talked about how his world has changed because he's now doing everything by telephone and by video conference. Well, the reality is that COVID is going to, and this experience is going to change the way in which people view travel. And they may not want to go half the way around the world to do something. So nearshoring is going to become an even more important part of logistics. And I think based on where we're located, Jamaica is likely to benefit from this. There's a question from Melvin Lane. Melvin, thank you very much. It's in recent times, the news revealed that Canadian investment in the production of cannabis in Jamaica is moving out. Can you say if that opportunity will be taken up by another infrastructure investor? I'm hoping, because it didn't say infrastructure, but I'm hoping that's why.
Comment.
So any comments on cannabis investing?
I have no comment
No
on
comment?
cannabis investing
No
at this
comment?
point.
No leasing of or creation of economic zones for the production of cannabis. Being
I
revealed
think
today.
that question will be more better directed to probably the Special Economic Zone Authority.
Okay.
All
right.
So I don't know if Brian has cannabis money sitting down somewhere
No.
that will be able to fill that gap.
No. So all right. Just one last question for the group. So we've been going through a period of lots of activity in the PPP, in the infrastructure sector. Investors have deployed capital. Why don't we just start in the same order that we started? How have the respective groups fared? The government, how has the government's experience in this infrastructure investing boom in Jamaica, how has it come out? David, as a fund manager, and so on.
So I think we've fared pretty well, and I think the proof of the pudding is that we continue to structure these transactions, and we have a very active portfolio of PPPs, and even, as I said, via privatizations, etc., because the government is really committed to private sector-led growth. I think it has been a win-win situation, obviously, in every single, and especially the PPP arrangements, right? Again, it's like a marriage, so it's not perfect. However, I think that it really has resulted in a lot of cash inflows to the government. Sure. Certainly concession fees come in, and where they're variable, obviously they're dependent on how the operations perform, and they really have been performing well. Let's take it out of the COVID arena, but as Herbie said, we have to recover from COVID. There's no doubt about it.
Sure.
So as government, our experience has been really good. I would undoubtedly say that the experience has also been good for concessionaires.
Okay.
They have had, made their returns, and they have brought their efficiencies and skills and capital to really build the capital stock in Jamaica, and we're happy about that. And based on the continued interest that we see in the infrastructure space and the PPP portfolio, I'm very confident that people are looking inwards.
Great.
I remember at a conference once, this guy came up to me and said, "You're from Jamaica?" And I said, "Yes." And I said, "Why?" He said that, "But you just got a very massive investment in your port. Like, what's happening in this country?" And I'm, saying that, look, we have our infrastructure opportunities are investable, they're bankable, despite the government's, fiscal space, but we're working on that, and we're very confident that it will continue.
So the government is very happy with how infrastructure investing is going. David, how are fund managers feeling?
Well, I must say that the activities in the country has the Honorable Prime Minister and the Minister of Energy, Science and Technology, but not in that order. Because with the advent of the renewable energy projects that you have in the country, as well as the other infrastructure projects that you've had, the Prime Minister has been able to speak boldly in the international markets about what's going on in Jamaica, the transition, the container terminal, as well as him and the rest of his government's vision on renewable energies being moved up to 30% and hopefully to 50%. And I think it's becoming a more attractive environment, because now that energy is being promoted as one of the core infrastructures in the country, and with the publishing of the new IRP, Integrated Resource Planning, and we're all there's a lot of international investors that are taking a look at what's going to come out of the IRP in terms of the tender. So will it be pure wind and solar as renewables? Will it be storage? Will it be energy efficiency also? So we're planning for all of them, and at least in my camp. And so
fund managers are happy, check, and can't wait to see what Denise digs out of her
exactly from our point of view.
All right, so Herbie, the arrangers happy?
We are, to the extent that it continues to, give us projects, good projects.
Yes.
I'm just waiting for her to get up.
Yeah.
Go to our office, though.
Okay, guys. Yeah. Okay.
Well, let me just say, I hope she doesn't give them all to you.
No.
So
no,
I
absolutely
don't know
not.
why you guys are sitting.
Stephen, you don't have to worry about that. Transparency and equity are the name of the game here, right?
And what I'd love to add, is that we work with everyone.
Yes, that is very true. That is very true, Herbie.
Very open.
That is very true.
Concerned, and we have very good relationships.
Very true.
Often use the word that we compete.
Yes.
We compete.
Absolutely.
We actually work together.
I like that. I like
That's
that.
good.
I like that.
That's good.
But from NCB Capital Markets perspective, we're into building wealth for our clients and to provide customized solutions for our issuers. And having gotten the opportunity to work on Jamaica's largest, and by extension perhaps the region's largest IPO, that experience was very, very, very good for us, right? We had to dig deep. Before now, when you talk about size of IPOs, the largest one in terms of dollar value was Vicinco. In terms of number was Wigton. Right? But just in terms of managing all those investors, we were able to do that along with our co-broker,
Yes.
NCB, right? Using our digital platform. So in all of this, digitization is also important, because without that platform, we wouldn't be able to
Sure.
Provide the customer experience as well as the efficiency that our clients would have realized. We are happy. We want more. We want to continue to provide the high quality investment opportunities for our clients, and we want to continue to customize the epitome, that that beacon of light, that when Denise looks out, she sees and says, yes, this project, right? We can do this project.
All right.
Right?
JPS.
Yeah.
What was
Well,
that?
I think I'm hearing some revelations here today. All right, thank you very much, Herbie. So, Brian, I don't know, you've already told us how happy you are. So I don't know that, we are running short on time. So you've already told us how happy you are, but I will allow you to
Well, as I said,
share some more.
Obviously, we would have now been able to invest in an asset class that we didn't have enough assets in the past. And we still, when I spoke to some of my colleagues, we still don't have enough assets now. So as we move towards less GOG, we're looking towards more diversification into asset class that provides the elements that I mentioned before: diversification, inflation protection, stable cash flow.
Sure.
So, what we have seen so far is more brownfield projects brought to the market at good pricing that is attractive to institutional investors. So what I would say is that continue to bring those prices at those favorable, those projects at those favorable prices to the market, and you will see participation. However, I would say for the DBJ and Carrier to continue to promote investment in alternative investments, especially including infrastructure assets, because there's a space for it. And what we have seen is that when you look at the private credit market, where we had a process to select fund managers based on an investor panel, we have seen we have seen positive results from companies like Cygnus, Epley, etc.
Yes. Good.
We believe that the next step is on the infrastructure side. We also saw it on the real estate side with the Epley Real Estate Fund as well as First Rock.
Okay.
So we're saying there is work to be done on the infrastructural fund side, and that will assist in driving the asset class.
So arranger check, investor check. Okay. So we have a good grouping here. I want to say thank you to David from MPC, Herbie from NCB, Denise from the DBJ, and Brian from Scotia Investments. Thank you for a wonderful discussion today. I think we really were able to delve into the topic of private equity and infrastructure investing, and we're really excited to have had the opportunity to share this little session with you. From my perspective, just to close, at the Grace Kennedy Financial Group, we do believe in infrastructure investing, and we have been very much focused on that. And part of the reason why we're supporting all of these initiatives is because we generally believe that the better your local infrastructure is, the better returns you will get on your private equity investments, your public equity investments, the greater level of it will facilitate greater GDP growth, which will facilitate greater consumer consumption and spending, which benefits us all as an economy. So I just wanted to make sure that before I left, I pulled it all together to explain why infrastructure is so important to us, because it is really a big part of how we're going to move forward as a country. So thank you very much, everyone. Thank you, panelists, and thank you, our audience.